We've talked a little bit about the FHA203k and the Fannie Mae Homestyle, and there are some similarities between the two. Both are mortgages that include a rehab or renovation component. Both allow repairs, upgrades, and remodeling to be wrapped into a single loan. Both are by far the least expensive way to finance the renovation of a home, and both can be used for either a purchase or a refinance. And there are some more similarities as well that we've talked about and we'll expand on later, but there's also plenty of differences between the two. While they are both lender finance renovation loans, the difference between them comes in who backs them and where the guidelines come from. FHA backs the 203k, the Federal Housing Authority, and they use the HUD guidelines in all that they do. Fannie Mae backs the Homestyle, and the FNMA guidelines are what they use to determine what's approved and not approved under their loans. Occupancy, major difference here. The FHA 203k requires that the home be owner occupied and be the primary residence. The Homestyle allows for both owner-occupied primary residences and second homes. In addition, the Homestyle also has a product called the Investor product that allows property investors to utilize the Homestyle to renovate a non-owner-occupied investment property. There are special rules for investors, and we will cover that in later videos. Minimum repairs. Now, on an FHA 203k limited product, there is no minimum, but you also remember that the limited only goes up to $35,000. On the standard product, there's a minimum of $5,000 in repairs that must be done. The Homestyle has no minimum. Maximum repairs. Now, the 203k limited, as we just said, has a $35,000 maximum, and it must include the contingency. The standard product has no maximum as long as the loan is within the FHA county limits for the area where the home is located and can go up to 110% of the value. The Homestyle limits the total of the repairs to 75% of the after improved value up to the Fannie Mae high balance loan limit. Simple example on a Homestyle. If the purchase price is $200,000, the max that you could have in repair or rehab is $150,000. The purchase down payment. FHA 203k has a minimum down payment of 3.5%. Buyers can also receive up to 6% of the sales price in seller contributions toward closing costs and prepaids, as well as gift funds up to the HUD maximum, and that'll vary by the area and by credit. The Homestyle has a minimum down payment of 5% for owner-occupied primary homes, 10% for second homes, and investors would need 15%. I can also tell you that a lender can require a larger down payment based on credit worthiness, maximum loan amount based on what they can qualify for their debt to income, and there's other things that go into that, but these are the basic guidelines for the products. The maximum seller contribution for FHA 203k is 6% of the sales price, closing costs, and prepaids. For the Homestyle, it's 3% of the sales price when it's at 90% loan to value or higher, and 6% when it's below 90% loan to value. You can also have gift funds under the FHA 203k. It's up to the HUD guideline maximum, and again, that's going to vary by the product, the area, and the underwriting. And the Homestyle will allow gifts up to the Fannie Mae guidelines, which again varies. So the lender is going to determine how much gift funds that they can use. Typically on an FHA 203k, they can get gifts to cover the entire down payment of 3.5%. Sometimes it can be more than that. On the Homestyle, there is a limitation depending on the credit worthiness and how they're underwriting the loan. And they'll come back and say, well, you can have up to 5%, which could be the down payment of the Homestyle loan amount as a gift fund. Again, we'll refer to the lenders on that because that's not something that we would have any part of determining. Credit. Now, an FHA 203k allows for slightly lower minimum credit scores, 580 and above, though each lender can determine the minimum allowable credit score based on a lot of different factors. First-time buyers with limited credit history can qualify for the FHA 203k and is probably the most often used loan for those first-time buyers or those that have a little bit more limited credit history. You also can have some dings and and dangs to your credit, and the FHA probably underwriter will probably allow those to happen as long as there's some explanations for those. The home style requires a higher minimum credit score, 620 and above, though again, each lender can determine that minimum allowable credit score, and typically we're seeing it higher than that. Better credit, longer history, larger assets are required on the home style versus the 203k. Mortgage insurance. Now that's when your loan on a 203 on an FHA 203k, mortgage insurance is always going to be required per HUD guidelines, regardless of what your down payment is. At some point, you can have that apply to have that removed if you have a good history and you drop below 80% loan to value, but you have to apply to do that. It's not something that's automatic. A home style loan requires mortgage insurance if the loan to value is above 80%. So loans below 80% do not require mortgage insurance per Fannie Mae guidelines. That can affect the payment because the mortgage insurance is a percentage of the loan amount and gets added to the payment. So if you have the money to put down or the equity, if you're refinancing and can keep it under that 80%, you're going to want to take a look at the home style. Types of repairs. For the FHA 203k, the standard requires a HUD inspection. The inspection is going to uncover some health and safety issues that must be addressed. They're called the mandatory repairs, and there's a mandatory list of things that they're going to take a look at. In addition, a home buyer or a owner refinancing can add items as long as they are not luxury items. Let me repeat that. They can add items that they'd like to have done to their home, customer choice, except luxury items. An example of a luxury item could be a swimming pool, for example. The 203k limited is similar to the standard, except you cannot include any structural repairs. Those can only be addressed on a standard, and a HUD inspection is not required for the limited. On the home style, it allows for all renovation work, including luxury items that add value to the property. So that swimming pool that you wanted, you can now do under the home style because it will add some value to the home. A HUD inspection is also not required for a home style loan. Those are the main differences between the two. There are some other finer differences, and each lender is going to have some of their overlay rules that are going to change those differences. But this gives you a good basic idea, and this PowerPoint presentation will be available to you on the Google Drive so that you can comfortably talk about some of the major things that are different between the FHA 203k and the home style.